trade. Okay, when people have a certain way on their on the way they trade and it works, if it works good, what happens is like people don't like to disclose that kind of information. They don't want to give out. Like when I first started, I was trying to learn from a couple people, but they would never tell me how they would never tell me exactly how they do things. Okay. Which is, I was like, fuck, like trying to learn from someone and then, but they don't even tell me like the full thing. Like, you know what I mean? I don't know. I don't even know if it's, yeah, like trade, like AC status. I mean, I don't know if it's about stinginess, but for some reason, right? If you have something that other people don't have, it's like they don't like to share that information, but fuck. I mean, no, it's only benefiting people at the end of the day. Let's see. Let me think of some stuff. I'm gonna go over some of the trades today and what we could look at. But as far as like strategies go, I mean, you have to understand too. Like, okay, the strategy that we use now works, so there's no reason why you should switch it up. So I can't just be discussing strategies every single time we have class because fuck it, it only takes 1 or 2 sessions to discuss a winning strategy. It doesn't take that, you know, it doesn't require 14 hours of fucking of someone to talk to just to go over a strategy that works. It's at the end of the day, I always say it's your you know, it's how you trade. I'm gonna go so Tesla today, okay? So for tomorrow, when you guys are all going to trade, if you see this, what I'm about to show you means that it's a good entry. Let me see. What time did I say that? Tesla put 7:49. I had planned on bringing someone in today to speak to discuss his strategies, but he's not here. So I don't know if it's going to be 2 hours. It might just be an hour if he doesn't get here. But what time was this? 7:49 is when I put Tesla puts, okay? I banked on this today. I got fucking on my other account, I put like 3K in. I put like 3K in my other account and then it had like fucking I had 100, it was like 120% return. So made like 6,000 off that. But thoughts on repo efforts and lack of liquidity for banks? Well, that's why they inject that's why they injected 1.5 trillion dollars into the market. It's so they when not I'm sorry, not the market. When they inject money, right? It's not, when they give money, when they give this money to the banks, it's not, Wells Fargo, Bank of America, American Express, is nothing like that. So it goes to like Goldman Sachs, BlackRock, all these different firms. And what they have to do is obviously they have to use that to provide liquidity to the market. But obviously it's not fucking working. All this money they're putting in, it's only gonna cause inflation. Who agrees? Who agrees with me that this is gonna cause inflation? I don't know too much about inflation, but does anyone here know more? A lot about inflation. I'm not gonna lie. I'm not gonna sit here and fucking lie and tell you make up some shit about inflation. I don't really know much about it. Meaning, obviously, right? Common sense. The more money they throw, it's like they can't just keep printing money. The value of the dollar is gonna go down. Okay. So here's the thing with Tesla today. So I signaled it at 7:49, which was here. Okay. You guys see this candle, right? So this candle right here is when I got in. All right, 7:49. This is 7:45. This is 8 o'clock. So right before this candle closed, I got in. Right now, the risk that I put on, okay, my okay, even okay, if you used if I had used a 10% stop loss, I would have had to cut my loss, obviously, right? But with today and understanding, and this is also when it comes to understanding market behavior, right? Now the overall trend is down, but what happened pre-market here on Tesla that you see that if you can see right now, it's in a range. Okay, so I was like, all right, whatever, it's in a range. It's in a range. So whenever it gets close to that bottom, what I'm gonna do is I'm gonna short it. Okay. Now this range is too big for you to just say, okay, I'm gonna make my freaking stop loss all the way up here. That's from 379, 380 all the way up to freaking 404. That's not a fucking that's not a stop loss. That's a maximum loss, right? That's a freaking maximum loss. So that was not, that was not my plan. Now, although at one point here in the next 30 minutes, it literally I was literally like down like 30, almost 40%. Now, okay, this is the thing, right? I understand how market behavior is, right? And I'm not gonna lie, like today, like I actually missed the stop loss. I was doing something else. I went to go do something else. I was looking at the 30-minute chart. I was looking at the hour chart. I was like, you know what? Tesla's breaking out of this range. And even if we pump a little bit, there's no reason why it should even go up, right? Because everything else is trash. Like look at this look at the price action, right? It's just straight down. So in my head, I was like, you know what? I'm gonna risk it. And so, I came back like 30 minutes later and it had already went like down here. So I was already up like $600. I was like, oh shit. All right, cool. But then I saw the price action and I was like, you know what? I honestly, if I was strictly following the risk management today, I would have had to cut loss. But even if you did cut loss, right, that doesn't mean that you can't re-enter, right? Because even if you cut loss here, okay, even if you cut loss during here, but also I was also here. Let me show you other things, okay? Even if you cut loss at around here, it was like you could have still re-entered, obviously, right? Because during this little pump right here from 380 all the way to 390, what pattern is it actually forming, right? Showing you a bear flag, okay? A bear flag is this. You don't have to make a pattern to see what a bear flag would look like in terms of price action, right? It doesn't require you. It doesn't require you to wait 5 hours later and to look back and make a bear flag pattern. All a bear flag is like if you see that a stock is going up, if you got to watch the candles, okay? If you see like 3 4 or more than 4 candles hitting the top and then you see it selling off and hitting the bottom and selling off, and it's going in an upward direction to where it's the candles are getting slightly smaller and smaller and smaller, then you should prepare yourself for the pattern. That's it. You don't need to see it, like you don't need to see the flag break before you find out that it's a bear flag. Does that make sense? Like you don't need it to fully reveal itself and finally break out for you to see that for you to already know that it's a bear flag, right? So the puts, I wrote it all the way down to my next profit target here, where I cut the loss. I cut the loss here. I mean, I'm sorry, the loss, the profit. I took profits here when I saw this potential bounce, I was like, okay, I'm gonna, I'm not gonna give my profits back. So, I did it on two accounts. On one account, I put in like 1,400, and I made back like 1,600 from it. And then this one, and then the other account, I made like six. But that was the thought process for that um trade, which is a good trade. Like these are the trades that you want to. The thing is, one more thing I'm gonna tell you guys, like, don't get caught in the noise. Okay, you guys know what noise is? If you look at a 4 hour chart, a 1 minute price action, 5 minute price action, 30 minute price action, what is that considered? If you're looking at a 4 hour chart and basing your entry off of the 4 hour chart, what is the 1 minute, 5 minute, and 15 minute candle? What are 1 minute, 5 minute, 15 minute candles known as? It's considered noise at that point, right? Because when I was looking at this, right, I was looking at the hourly and I was looking at the 30 minute price action, right? Now, I thought that, you can assume that, all right, fucking it's gonna bounce up, right? Due to this candle right here, this big hammer. Right now, if it was gonna bounce, it would have bounced already. That's what I was thinking. It wouldn't have opened like this. If this was gonna bounce, then this would start that momentum all the way up, right? Possibly breaking that 450. But obviously what it did was, after it found, this is also one thing you guys look, when you guys look at stuff, right? Always look at different time frames, and trying to see what's happening, like how the price action is during those frames, because that's important. Because look here, this is buying pressure. Okay. And then it didn't even break out at open, right? Like how I would expect it to. But what it did was it fell into a range, right? And then when it falls into a range, what happens? What happens when you see a trend and then it falls into a range? Does it usually follow that trend based on what you guys have seen? Exactly. Okay. When something falls into a range like this, what it usually does is it'll follow the trend, the overall trend. Okay. Hold on, I'm looking for the box. This trend. A lot of people too, like, you guys are too worried about perfect entries, perfect exits. Don't even worry about that. Just make sure you get in um, you know, at a good time. You should already know what's a good time and what's a bad time, or right, I don't have to go over that. But when it comes down to it, it's all about, you not hesitating on whether you want to get in, and you understanding the price action itself, and then going based off of your analysis and what you think is going to happen, right? I saw some of you guys make some good trades today too. You guys made some money. That's cool. Let's see, will the floor closing really affect this market? Well, think about it. um if the trading floor is closed and you have all these floor traders working for firms, using big money, providing liquidity to the market or whatever the fuck they do there, they're just gonna start relying on the algos. And then I don't even know. I'm not sure. I'm never. I don't know. I'm gonna be honest with you. I don't know how it's gonna affect it. You don't need a like, they don't. Wall Street doesn't need people to fucking sit down and trade anymore, right? No one's picking up phones, calling up clients, trying to sell them stock anymore. All they got to do is set all the algorithms for people to, for their computers to buy stuff. Where's the trades that you guys made today? Boeing. Yeah, Boeing is really, really. I told you guys this shit was gonna keep going down, and it kept fucking going down like crazy. It's still not even showing. It's not even showing me anything that's gonna Yeah, it might bounce, but doubt it. I did swing Starbucks calls just to see what would happen. Is it too late to buy puts on Boeing? Man, nah, I don't think so. I mean, we've been shorting Boeing since like 300. Where were you at? What the? What might happen is this. All right, I might see a little pop here and then bounce back down. All right, he's home. I'm gonna invite him here. I'm gonna have him go over his own strategies. What was the strike? What's today? Tuesday? Okay, here. I'm gonna give you guys a clue on, you guys should never, ever be stuck trying to find a good strike. You should already know what the strike price should be. Okay. If you're day trading something and it's Monday and Tuesday and you're day trading, what is a good expiration to take? No, expiration Friday. Good. Now, if it's Thursday or Friday or maybe even Wednesday, should you take the same week expiration or the next week's? The next week. Yeah, that's literally it. There's nothing to it. Nothing to it. All right. Now, when you look at swings is when it's more, you know, it's more because you have to look at the delta, the theta. Just make sure the delta is higher than the theta. That's it. It's as simple as that. That's it. You want to make more per dollar than lose more per. You want to make more per dollar or or lose more per dollar, right? You want to make more per dollar. So that's what delta. All right. Hold on. Thoughts on breaking 2300 today on S&P? We'll see. Maybe. You guys have to understand, like, this is not just a chart we're talking about, right? When we're looking at these things, right? It's not like you can just, this is the overall economy we're looking at. It's not just, a number. Where did it go? What the heck? 1 second. Jeez, I hate when this does this. When you are day trading, your expiration should be Friday that week, but if it's Wednesday and up, the expiration should be next week. Yes. Yes. But do you guys know why? Like, you guys are asking these questions, but you need to know why. Come on, it's common sense, right? If you buy a date, if you buy a call that it's Thursday and you want to buy stock, and then you want to day trade it and it's Thursday and the theta is $500, and the theta is $500, and you're already 2 hours in your call and you're not making shit. Why are you not making shit when you're 2 hours into your play and your theta is $500? Because of time decay. That's why, you know that's what options is. Okay, options is there's a reason why all these fucking stocks are cheap when you buy options. There's a reason why. Okay, that's why, because of time decay. Okay, because they don't want because what they want is they want idiots to trade and let their fucking options run until expiration, or people panic, and then that's why, even though options is cheap, it's still more dangerous than just trading stocks, because because it's fucking cheap. Everyone's gonna, you lose money, you're gonna, all right, fuck it, I'm gonna put money back in. It's a never-ending cycle. Yeah, I'm gonna post a video of the Greeks in the chat after this when he comes in here. But tomorrow I'm looking at Boeing again. I want to ride this till it hits like $2. Because eventually these names are gonna get bought up. Okay, that's what we're waiting. That's essentially what I'm waiting for right now. It's already gone down like crazy. I'm just waiting to buy it up. We just don't know when. Anything else upcoming to watch? Anything else upcoming to watch? Well, what do you guys think we should watch at this point when everything is down? You watch the whole thing. You want to watch everything. It's literally, buying opportunities everywhere, but we don't know when it's gonna happen. All right. So the thing is, okay, why did SPY pump like that after hours? You guys, okay, this is one thing too. Like you got like nothing is just gonna keep going down and down and down and down and down. Like it's so, dude. I literally like at this point, it's like people are so unrealistic when it comes to stuff. Like you just think everything's gonna keep going down. The rest, things get bought up. What happens when you trade? Someone buys, someone sells. Someone's always gonna buy, and someone's gonna sell. You're gonna see buyers. You're gonna see buyers. You're gonna see sellers. You're gonna see sellers. Right? It's always going to be it's always up and down, always up and down. It's literally always up and down. So don't panic when you're like, oh, the market's pumping, dude. It's after hours. It's literally up like $200, which is nothing. SPY is soaring. Okay, soaring my ass. It's only been 2 hours after market. You don't even know. The thing is, one thing I do see on SPY is, this is what's, I don't know. We might bounce here. This might be the bottom, but we don't know. They might say I found. They might say this is perfect because it's the same bottom from 2017. Yeah, yeah, from 2017. Uh, might be that time. I don't know yet. We'll see tomorrow. Look, so freaking annoying. I don't know. This is crazy. If we go up here, it's like riding a reversal is the hardest thing because you don't know when, you don't know when it's going to be confirmed until it gets back up to the freaking high. It's like, oh shit, we just bounced. And the thing is, when we bounce, it's not going to happen. It's most likely not going to happen pre-market. I mean, it's most likely not going to happen um during market hours. Okay, just like how we've gone down this whole time, it all happened after hours for the most part. That's most likely what's gonna happen when everything gets bought back up, and when everything goes back up. One thing I want you guys should do some research on too is like, you know, pandemic um pandemic impact on economy. This is what I looked at. This is what I looked at the other day. I was researching this, right? Dollar cost average and then on the way down. Yeah, that's one thing you can do. Guys, all the charts is literally like, you know, well, Microsoft is in a range. and it's holding that support nicely. So we might see it bounce back up. That's crazy. It didn't even Microsoft. I mean, Microsoft did take a hit. I'm not gonna lie. It didn't take that big of a hit, but it took a hit. Honestly, we might. Yeah, we might see the bounce because if any lower than what we're at right now, what we were at today, Walmart. There's a reason why. You guys know why Walmart's going up, right? I have swings for Walmart all the way up already. There's a reason why Walmart's up because they're gonna have the best fucking year of their lives. So is Target, so is Costco. They're gonna report like the craziest earnings you've ever seen. Supply and demand, my friend. Everyone's at fucking Walmart and Target right now, preparing themselves for quarantines. Look, it's already up after hours, which is good.
Yo, what's good, guys?
Julian, are you here?
Yeah, I'm here.
Let me see. Let me
How do I share my screen?
No, I'm gonna. What's your name on here?
Let me check.
Yeah, I see it.
Julian. Oh,
See that?
yeah.
Can you guys see his screen?
Ooh, how do I turn that off?
Hold
How
on.
do I do that?
Here,
Okay.
make me the host again. Okay, hold on. This thing is confusing. All right, try now. It should say share screen, does it?
You're reviewing. Oh yeah. Alt S. Somebody said press Alt S to share screen.
Here, I'm gonna stop my share. Okay, now you try.
All right. Oh, okay. I see it. I see it. Okay. Can they see my screen? I think. Can they? Can you guys see it?
Yeah, I can see it. I can see it. I'm gonna mute myself so you can talk.
All right. So pretty much what I'm gonna be teaching you guys. How do I get rid of this? Let's put this down here. So what I'm going to be teaching you guys pretty much is how I trade, how I day trade on the 5 minute using EMA crossover. What I do with my EMA crossover strategy is I use this strategy to find my buy signals, find my sell signals, find my uptrend and downtrend signals. So let me go connect to a charger real quick before I get started. All right, let's get this started. Okay. What I would like to use, we're going to use SPY since that's what I like to trade the best. So the time frames that I like to use when I'm day trading is the 10-day 5-minute. The reason I like to use a 10-day 5-minute when I'm day trading is because, of course, I take up all 10 days of that trading period, and I use that on a time minute on a I break it down into like a 5-minute time frame just so I can get a larger move. And using a 10-day just gives me that much more information to trade off of rather than using a 5-day or a 3-day, because using a lesser of those type of time frames doesn't give you that as much information to trade off of. So when using the EMA crossover, it's best to just wait for the market to open and let it do its thing for the first 30 minutes or to an hour. That might sound crazy to some of you guys because some of you guys might like to trade that first jump of the go, but it's always good to give the stock time to do its thing and let it play out so you can get your EMA signal lines to set up. So let me fully edit this and clean it up. Okay. All right. Perfect example is right here. I don't know if you guys can see that. Let me clean up my studies. Um, Sorry about that. Let's clean this up. Okay. So right here we can use today's trading, for example, and then I'm gonna pick other stocks to show you just how accurate this works. So what we're looking at right now is we're looking at SPY. SPY's trading as of this morning. Now this morning, of course, we had the markets opening and our EMAs pretty much shot up and did its thing. Now the 9 EMA represents that's our leading indicator. So every time we're looking at our 9 EMA, we're going to want the price to always stay above it, if it's in an uptrend, or below it if it's in a downtrend. That's what our 9 EMA will be used for. And my 9 EMA will be green. So that's what it's going to be represented as, in case you guys are wondering. My 21 EMA, that's going to be my median indicator. That's going to be represented as orange. And this is going to act as, that middle range to where if price gets there, it's like, okay, I see that, this is happening. The price is at my 21. Let's see what's going to happen before I make my move. So when I see price getting to that 21 EMA, regardless if it's going up or down, I'll have my trade ready to see what happens next, and whatever happens next will determine if I take the trade or if I don't take the trade. My 55 EMA, obviously that's, I consider that the bearish in EMA. So if price is, under that, if the 55 EMA is, above your price candles, that's bearish. If it's below it, that's bullish. So I'm going to show you guys an example of how I would have traded, this morning. Obviously, these candles wouldn't have been here, but we'll just use the notion that let's give the market, some time to get ready and your EMAs to, set up and do its thing. So we had the market opening today, 6:30 in the morning, my time. Our 9 EMA took off. If I just woke up and I missed this, I wouldn't chase this. I can see that price is sitting on that 9 EMA, so it's in an uptrend. My 21 is in the middle, my 55 is below, so that's showing me a clear uptrend. Pre-market was giving me a buy signal, as my 9 crossed above my 21 and above my 55, but of course I didn't take that because I missed it. So I'm gonna let my EMAs do its thing. So price did its thing, it kept going, it kept going. We start seeing some resistance at the top here. And then what happens next is our EMAs start to curl. From this point on, again, this is all looking at the 5-minute time frame. So from this point on, once I see my EMA start to curl, I'll then go back to my notes saying, if my 9 EMA is under my 21 and below my 55, that, right, like if my 9 EMA crosses below my 21 and my 55, that's a full-on sell signal. Now to prepare for that sell signal, if I start to see this curl, will be this. If my 9 EMA starts to curl and the price breaks below it, this 9 EMA now acts as resistance. So the first thought that'll jump in my head would be, okay, if price cannot break above this 9 EMA, this leading EMA that it needs to hold above it to continue that uptrend, if it cannot hold above my 9 EMA, I'm going to be looking to get puts, because now this is going to act as a resistance and we're going to have to now go ahead on with our 21 EMA. So as we see here, price failed to hold above that 9 EMA and it broke below. So now I'm neutral, almost bearish, but not full on bearish yet, because price can always, reclaim that 9 EMA. So now we have our 21 EMA. Price almost bounced off of it as support, but it failed to hold, which caused our 9 EMA to then be dragged crossing through our 21 EMA. At this point forward, once I see this cross happen, that lets me know, okay, get puts ready. Like you can either get your puts ready or you can get inputs and then, use where you start to see your EMAs crossing, you can use that as your stop loss. And then in this case, that will be our resistance point, or, nearing that major resistance area. So my 9 crosses my 21. I have my puts ready and I'm like, okay, myself, I would normally take this trade because I see everything happening and, I see the weight of the candles and everything. I see how volume is working. I'll take this trade and then wait to see what happens. If we start to break lower, then I'll add in. If we start to, go break up, go higher, I'll stay back and then see what happens and see if I have to cut my stop loss. So now let's continue to what's going on. Price tried to, after it broke below that 21 EMA, it then started to test this 55. Now, as it's testing this 55, you have your 9 already crossing this 21, and now it's going to be, testing that 55. So if you go back to your notes, if your 9 crosses below your 21 and your 55, that is a sell signal. So if your 9 crosses this 55, that's a full-on sell signal, and you want to take it, no matter what. So as we see here, let's say I were to get in puts here because I went on that notion that, we're at that 21 level. I'm going to get in puts, see what happens. While we're testing that 55 and everything, we're still we're making money on that pullback down. So if it breaks below that 55, we're in clear waters. We can pretty much relax and let the price do what it does. So what happened here was price now started to test that 55, and we had instances. Let me see if I can zoom in because I don't know if you guys can see that much better. So the price started to test that 55, and we had instances where we started to bounce at that level. So if I were to get in puts here and I start to see this happening, this is a good example of not getting shaken out. What I call sitting on your hands, so to speak. I get in my puts. I see that the price is playing with that 55, but me personally, I'm not going to sell. And my reason for not selling is because the price has not broken above that 55. So that 55 is acting as resistance, my first level of resistance. If it breaks above that 55, then I'll be like, okay, let me see if it'll test that 21 EMA and see if it can break above that. If it doesn't, then I'm going to still hold my puts. If it breaks above that 21, then normally I'd sell out, or I'll be ballsy and then see if it tests that 9. But as we can see here, we got in our puts, price started breaking down, and then we started to trade sideways here. What happened was we got our full-on sell signal as our EMAs crossed, but then, it went into indecisive mode as what's going to happen. since price failed to break above, like price tried to break above our 9 and 21 here, but it failed and acted as resistance, and I seen this, I would hold on to my puts, because as we see here, these candles are getting rejected right back down under those EMAs, and we have our 9 that's still under our 21 and under our 55. And so long as your 9 is under your 21 and 55, that is a sell signal. So in my head, regardless of the noise that's going on, at the end of the day, I still have my sell signal intact. It's not broken. So I'm going to stay holding on to my puts. So I'm holding on to my puts. I'm holding on to my puts. And what happens here is price now gets rejected at that 21 and now goes back under that 9. So now my 9 is resistance again. And like I said in the beginning, if price is above your 9, that is an uptrend. But if the price is below your 9 EMA, that is a downtrend. So I'm holding my puts, and as you can see here, I would have gotten in at 240. I see all this happening, but now I see my full-on sell signal playing out, my whole downtrend signal playing out. My 9 is below my 21 and my 55. And we pretty much, if we were to hold that and then sell that when we start to see our EMAs curl, just to be on the safe side, we would have captured from 240 all the way to 229, 228 pretty much. So that's like over, 15, almost $20 worth of price action on SPY, just using the 5-minute and using the EMA crossover. This is not listening to what news is going on. This is not going on stock tweets trying to see if people are bullish and bearish. This is not looking at flow algo or money flow or anything, because if volume steps in and there's buyers that step in, you'll see that happen because your EMAs will shift upwards. Like you'll see that move up happen. So you'll know, okay, volume stepped in on this candle here, or volume, is heavy on this candle here. So that's playing the downside. Playing the upside, you want your 9 to be above your 21, and you want your 55 to be below your 21 and below your 9. So you want that 21 EMA to always sit in the middle, regardless of any direction of an uptrend. If it's in an uptrend, that 21 is always going to sit in the middle. Your 55 is going to be at the bottom. Your 9 is going to be at the top. If it's in a downtrend, 55 at the top, 9 at the bottom, 21 is still going to be in the middle. So let's say I wanted to get a buy-in after I got out of puts here. Yes, the market is closed here, but let's just use this, the rest of this trading period for an example. If I wanted to get a buy-in and I see my EMA starting to curl, but I was still indecisive, I would then say, okay, I would want price to now break above my 9 EMA, sit on it and act as support, then test my 21, sit on that, act as support, and then go and test the 55, sit on that and act as support. Now, while I'm wanting price to do that, I'm also watching my 9 EMA, and I'm making sure that as price is breaking up here, through the rest of my EMAs, trying to test its support and everything, I want my 9 EMA to be leading as well. Because if your 9 EMA starts to lead, that tells you that, okay, price is it's starting to go in an uptrend. Because so long as price starts to sit above that 9 EMA, it's considered an uptrend. Now, if you were to scalp this, if you were wanting to scalp this, knowing that price, you still had your sell signal, but you see that reversal happening, you could have easily scalped it, just coming off of the fact that price is now testing my 9 EMA and it's sitting on it. And that 9 EMA is a leading indicator, which will, drive the price, so to speak, guide it, so to speak. So you could have got calls at that break above this 9 EMA here, that break above that resistance point, so to speak, and then ride the calls so long as your price sat above that 9 EMA. And then if it broke below that 9 EMA, you could have sold your call, or you could sell your call at that red candle there, and take that scalp in. And that scalp would have been from 228 to 235. Now these numbers are big because the times that we are in are very volatile, and honestly, you can make more money on the downside than you can on the upside in these times. But the opportunity is there on both sides, and all you need to do is just understand how to use your EMA crossovers. So let's use another stock. Like we're gonna use a random stock. Tesla, good stock. Yeah, let's use Tesla. We could use today as an example, or I'll use a different day as an example. Because there are times when your EMAs will sometimes almost give you a signal, and then that signal is kind of, you know, a dud. It's nothing. But I'm trying to see if there is an example of that. Yeah. Okay. So an example of a fake out, you know, on an EMA, which is it's not rare. It's pretty common, but you'll know if it's a fake out. Is this blue line right here is also my VWAP. You guys can use VWAP if you know how VWAP works. Use that to your advantage as well. But what we have here is coming off of a sell signal. You know, our 55 is at the top, our 21 is in the middle, our 9 is at the bottom. We can look here and say, okay, price is, you know, starting to uptrend because our 9 is starting to cross our 21 and cross our you know, test that 21 and then start to test that 55. Now, normal traders who aren't using this EMA strategy will see this curve and think, okay, price is going to reverse because, you know, it's pretty much bottomed out. And they'll probably, you know, get in probably somewhere right here and then get faked out because they wouldn't see what would happen here. But if you use your EMA crossover, you would pretty much see that. I wouldn't say ahead of time, but you'll see that some, like, just a couple of minutes before your standard trader. And this is what I mean. So price is uptrending. We broke above our 9, we broke above our 21. But as we try to test that 55, and I like to use VWAP, you know, as that median range, we rejected off of it. So we rejected off of it on a candle here, but then we tried to test it again at the second candle and rejected off of it. Now, while we did that, while we got that rejection, our 9 started to curl back down. Now, remember how I said keep your eye on that 9 EMA because that is your leading indicator, which will drag the price and, you know, let you know where price is going to go. Our 9 started to curl back down on that first rejection. You can see that curl point right there. And that second rejection is when it started to really show itself. So if we were looking to get in calls and seeing that happen, we will say, okay, I'm exiting calls because now price didn't break above, you know, that 55. So that sell signal is still intact. I'm going to try and look to get puts. So if you're watching SPY at pre-market, this right here is pre-market action, and you're seeing this happen with your EMAs because your EMAs are moving as well in pre-market, and you're seeing that happen. You can then wait till the open because as you can see here, right when we opened, we still had our sell signal intact. So you could have easily gotten puts right when the market opened, not caring if it went up or down, because if it went up, you would have had to wait, you know, for price to break above that 55 EMA. And as you can see here, it tried to test that 21 many times and failed. So that 21 EMA resistance point would have been, you know, a battle for price to get to. So right here, coming off the market open, I could have easily gotten puts on Tesla and then played the puts going down because our EMAs our 9 crossed below our 21, and that price came down drastically because you guys know how volatile Tesla is. And that would have been an easy scout. If you if you didn't play that morning and wanted to follow the rules and say, I'm going to give the market 30 minutes to an hour to play out so my EMAs can, you know, fully set up, you can then wait for the market to do its thing. You know, who cares about the uptrend? If you know that the overall market is bearish and you really want to get puts on Tesla and you don't want to play the call side, yet you see this uptrend happening, you can say to yourself, okay, I'm going to wait until my EMAs, you know, start to show me signs of selling. So as we can see here, let's say I didn't want to play calls, Tesla started to run up and I start seeing my resistance point. So I'm like, okay, I start seeing resistance. I'm going to wait until price now starts to break below my EMAs and then start showing me a setup before I take my full on position. So price starts to come down on my 9, it bounces off of it, breaks below it, and then starts to test that 21. Now, if I seen this first break below and tested that 21, I would want to get in puts, but I would say I want to wait to see that break of that 21, and I want to see, that full on 9 crossing my 21 and everything, just giving me that extra confirmation that this is a sell signal. Because so long as price, could test that 21 and that 55, if your 9 doesn't break below that 21 and 55, you don't have a sell signal, and price could easily pop back up and go in an uptrend. So as we can see here, price started to test that 21, but it couldn't break below, and it popped right back up. So put anybody that got puts here, your regular trader that got puts here, that seen this rejection here and wanted to chase it, would have gotten burnt because they didn't see this coming, but you would have seen it coming because you would have known my EMAs didn't show me that sell signal yet. Right now, price is still in an uptrend since my 9 is leading it, my 21 is still in the middle, and my 55 is below. So we're going to give Tesla more time to play out, because we still want that sell signal, because we see that resistance happening, and we're going to take note of that. So if price doesn't break above that resistance, we know we're going to get ready to start getting puts. So price starts to break below that 9 again. It starts to break below that 9 again, but this time as it's breaking below that 9, your 9 EMA is now starting to cross below your 21. And that is the perfect sign that we want to see if we're trying to get puts. We want to see our 9 starting to cross below that 21. So if it crosses below that 21, now that I've seen this happen before, but the 9 didn't cross, but this time it crossed, I'll be like, all right, I'm going to get puts this time because I have that confirmation that we got our first cross. And now I would want price to break above that 9, causing my 9 EMA to shift back up into an uptrend in order for me to get out, and that point would have been at 482. That would have been my resistance point to get out, So we have price, our EMAs cross below that 21, gives me the sell signal. I'll get in my puts. We see price testing that 55. It broke below that 55. That right there is a full-on confirmation that, okay, we have a sell signal coming. So now our 9 crosses below our 55. And as you can see here, leading on, we have that 21 again in the middle, that 55 at the top, and that 9 at the bottom, dragging price below it, giving us that full-on sell signal. And just in this 5-minute time span, if I were to see that confirmation at 477 and took those puts before I seen any confirmation to exit, because I can see this full downtrend here, my point to exit, because I see this quick spike, and even if you got caught in this quick spike and didn't have enough time to exit, that's still from 475 or 475 to, let's just say you got caught up here, 461. That's still a good, profit margin that you captured on Tesla. And coming off of a contract, a $10 move on a Tesla contract, you guys know how much that is. And if we can see here, this would have faked traders out right here if they would have gotten in without using the EMA. Let me see if I can zoom it out better. Yeah, this would have faked traders out right here. Your average trader would have seen this and said, okay, this is a bull flag. Let's see what happens. But they would have gotten nervous here because they would have still seen, candles picking up. So they would have thought buyers are stepping in. But since we have our EMA set up, and it's so simple, I can't stress how simple this trading is. I like to keep my trading very simple. So if you guys are, seeing this and you're like, this is simple as hell, it's supposed to be simple. We see this here. We see that price didn't break above that 9 EMA. It's still, acting as a resistance. So there should be no reason for us to sell our puts when we got in at 475 and price started to maybe show us the end of an uptrend at 467. It didn't break above that 9 EMA, so we're still holding puts. Right here again, your other traders would have gotten faked out at this point, but we didn't because, yes, price broke above that 9 EMA. We still had our sell signal intact. Price didn't, our 9 EMA didn't turn and break above our 21 or 55. So I would have still held my puts because we tested that 21 and got rejected. Had we have tested that 21 and then, held it and then form a new candle above it, I would have exited my puts, yet still would have captured a nice 475 down to 468 move. Because if it held above that 21, that would have meant, okay, buyers stepped in, it might go to that 55 and then break above it, causing an uptrend. but it tested that 21 and instantly got rejected back down right under that 9 EMA, acting as a resistance. I'm still holding my puts. And now that I finally see that second breakup of that 9 EMA, but the candle again, like I said, closed and opened above that 9, I would then sell my puts and still capture a good profit, and then let price do whatever it wants to do. If I wanted to get greedy, get in puts again, seeing that there's resistance here and price was, showing resistance here, like let's say I sold here and then came back at this time in the markets and then started to see my EMAs crawl, I'll say, okay, I have a certain amount of time before the markets close. If I can get my EMAs, or if I can get, not necessarily get your EMAs to start showing you that sell signal, because you still have your sell signal intact, but if you can get price to not break above that 55 and then still break below that 21 and 9, you can get back in your puts, again, taking price all the way back down. And that's literally how you can trade on the 5 minute using the EMA. And you can use this on like legit any type of stock. I really don't prefer you guys using this on slow movers such as Bank of America, or like, I mean, you can use it on Bank of America, but if you do want to do it and you're playing contracts and not shares, you want to buy yourself time, because Bank of America moves slow. But this EMA crossover, not only is it beneficial with contracts, it's also beneficial, with penny stocks. So if I have anybody in here that trades penny stocks who wants to use your EMA crossovers on penny stocks, let's pull up VXRT and see what this did. See, this is a good one. You could use your EMAs on penny stocks as well. So if you have like 2,000, but you really don't want to lose that 2,000 and you want to play it safe, you can then open up your penny stocks. But you want to make sure these are, penny stocks that are movers. And when I say movers, you want to make sure there's volume around it. You want to make sure it's a market gainer, a market gainer or a market loser, one of those two. You want to make sure there's people on it. Regardless if it's a pump and dump, it doesn't matter. So long as you have your EMA set up, you'll be straight. But VXRT, this is a stock that surrounded around the coronavirus. So they specialize in making, I think, the masks or something for the virus and all that. So there's always a good amount of volume coming into the stock every day. And as you can see here, it's been uptrending like crazy. And I did play this before. So if I were to, look at this stock in the morning, I see that I look at the pre-market action here. Let me see if I can zoom in on this pre-market action. I'll take a look at my pre-market action and I can see, okay, price wasn't an uptrend, but if I'm just doing a no-brainer, we have a gap up and price does have to fill this gap eventually. It doesn't have to be today, it doesn't have to be tomorrow, but it has to fill that gap eventually. So I'm going to keep note of that, as if price still continues that uptrend, I'll get calls, but keep puts on standby just in case this gap gets filled. Do know it's a penny stock, those gaps tend to get filled. So I'm looking at pre-market action here. Price is sitting on my 9 EMA, but then it starts to break below. So I'm like, okay, when the market opens, if price still stays below this 9 EMA, I'm going to start looking at puts, or my bad. I trade options so much that I'm used to that. I'm going to look to short this stock. So you can then open up a short position, seeing that your EMA's crossed below your 21 and your 50. It didn't cross below your 55 yet, but seeing that it crossed below your 21 here gives you, a semi-sell signal. So you can now short VXRT here for however many shares you want and write it on down there. And you don't necessarily have to sell at that 55 again, because your 9 is below your 21 and you still have that sell signal and price is in a downtrend. You just need it to break below that 55 to get that full on sell signal. So if it doesn't break below the 55, then you want to sell at see profit, take profit type of thing. But you can do it on a short side and you can do it, playing the long side. So if we look for when there was a chance to go long here, giving us a buy signal, let's check down here. Yeah, so no, that's not enough time. Okay, this would be perfect right here. So a buy signal, would be good. So if we've seen this happening, so take note that if your EMAs start to line up like in almost a straight line, especially on a penny stock, if this is on a bigger stock, even better, but especially on a penny stock, if your EMAs start to line up and get almost straight, take note that a breakout is preparing to happen in either direction. You can do some, pre-technical analysis and look at your chart, your candlestick patterns, and see what the overall setup is showing you. If you see a wedge setup or something like that, to know where the breakout might go. But me just waking up, looking at pre-market action and seeing these EMAs lining up in pre-market is letting me know, okay, there's a breakout that's getting ready to happen. Let's see what happens, when the market opens. I get questions as like, how quick do the EMAs react? They react pretty quickly. Like the lines you'll see when they start to spike up. But when the breakout happens, your 9 EMA will give you a clear on uptrend, like a quick uptick. And you'll know, okay, volume just stepped in on that candle. A breakout is happening. So if we look here, the market opened. I could zoom in further and show you guys that, my 9 is above my 21 and above my 55. So I have a buy signal here, regardless of how small it is. So I could take that into account for me going long with shares. So what I'll do is once the market opens, let's see, where is that? Where did that happen? Right here. Market opens, my EMA clearly spiked up. Like from being straight, it showed me a spike. It diverged from my 21 EMA. So just off that alone and price riding that 9 EMA, I'll go long right there. And my stop loss would be price breaking below my 9 EMA, my 21, and my 55, and me getting a sell signal. That would be my stop loss. And yes, I'm making it that major because I am playing with shares and not contracts. So I have more than enough time to let my trade work out, to my favor, and it's not a loss until you sell, so to speak, because with contracts, you're dealing with expirations. With shares, you're not. So I go long here at 129 this one morning when the market opens because I see my EMAs lining up and I see that 9 uptick and price rides it. And this is VWAP here. If you guys know how to play VWAP, when price does ride VWAP, that is good as well. You can use that as a support when price is riding VWAP. So if we look here, I have double confirmation. My price is riding my 9 EMA really hard, and price went from 129, going all the way to 196, and it's sitting on that VWAP too. So it's not breaking below that VWAP, so I'm not bearish yet. And if we look at our overall EMA setup patterns, we have a full-on buy signal, an uptrend signal. This is your buy signal right here, that 9 crossing that 21 and 55 going to the upside. And then your uptrend signal is, that 9 fully being extended, your 21 sitting in the middle, and your 55 sitting at the bottom. That's your buy signal. Your full-on, that's your uptrend signal. Your full-on downtrend signal would be your 55 at the top, 21 at the middle, and 9 at the bottom. Now, if you guys wanted to try these out for swings, what would be a good stock? I wouldn't use SPY to swing because it's never a good idea to swing SPY ever. What would be a good one? Let's try Apple. If we use Apple, we would probably have to use a bigger time frame. So I would say if you wanted to swing really, you can still look at the 10-day and then just go on out to your 4-hour. Because if price respects 4-hour time frames, and for this is how I do my trading. If price respects my 4-hour time frames, then it'll play out good for tomorrow. So let's see. But you would obviously have to give price more time, or your EMAs more time to give you those signals. Let's see. I'm going to look for a clear buy signal or clear downtrend signal. Because if you're using a 4-hour, again, for a swing, you want to look at the overall Okay, let me zoom in here. So if we see here, if we go way back to when Apple was at 303 and we were looking at a 4 hour and we knew that the market was bearish, we had all these bad news happening and everything. Yet we still wanted to take puts, but for the long term because we knew, the longer outlook was bearish, but we still don't want to get caught up in, all the noise of the news and the Fed pumping and all that. You then go out to the 4 hour. Let me get rid of this study here. Get rid of that. That's a script. Okay. So if we look here on this 4 hour, when Apple was at 303, what day was this on to? This was on the 4th. So the 4th. Okay. So if we were watching Apple, and we had it on our watch list on a 4 hour, and we were looking at it on a 4th, we see here that coming off of our uptrend, our 9 EMA, I may have to go out 20 days, but our 9 EMA started to curl. And it started to curl. And so the fact that it's starting to curl like this, I'm going to then say, okay, let's wait for the next day and see what happens on Apple, and then go back to the 4 hour and see what happens. So your next day passes, and that was a bearish day for Apple. And then you go back on your 4 hour, you look at your 9 EMA, and now you can see a full on, downtrend curve pattern. So now you can either get into puts there, or you can wait, for that 9 to cross below that 21, because our 55 is at the top. So so the next day goes by. You don't necessarily have to get puts, but the next day goes by. We see that after hours happen. We see pre-market happens, and it's bearish in pre-market, but price still goes up because I think this is when the Fed started injecting too. But if we look at our 4 hour and look at our EMA crossovers, we see that our 9 has now crossed below that 21 during that pre-market action, when that was happening. So regardless of these green candles here, if we were to take puts, just because that 9 crossed below that 21 and it didn't show signs that it was going back in an uptrend, because right here, it wouldn't be great to take puts because we don't have that full on 9 crossing that 21, because here price could easily hold the 21 and then bounce back up. But if it crosses below this 9, that 9 being a leading indicator, it'll drag the price down. So I get in puts here at this one day when the market opens. Yes, we do have green happening. Apple is green, so I am taking a hit on my puts. But looking at the 4 hour, we still have our price under that 9 EMA. Our 21 is in the middle and our 55 is at the top. So our sell signal is intact for the end of this day. So yes, I took a hit on this day, but I still have my sell signal. I'm still going to hold my puts. We look at that after hours happening, that pre-market happening. What happened in that pre-market? I think some news happened here, and we gapped down. So yes, if you took a hit here on your puts trying to swing for the long term, if you went 2 weeks out or something like that, you would have been blessed by the market gods, off of a crazy gap down. But you would have seen this gap, not necessarily the gap down happening, but you would have already known that the price was supposed to have been, bearish, because our 9 crossed below our 21. So it was only a matter of time before something happened that caused the price, to fall lower. So if you were to take that swing that day, or you don't even have to take it this day, if you were to take it at that cross, boom, you would have profited from what, 292 to all the way down, let's just use it right here, 270. A nice move down. And that's a swing. So opening the next day, I think this was like a weekend period or something like that. Opening the next day, you have a green candle, but you still made so much money, and price has not broken above that 9 EMA. So what does that tell you? My sell signal is still intact. I can't take profit on this swings. If I have more than 3 or more than one contract open, I can scale out and still keep that one and let it ride, because so long as price doesn't break above that 9, I'm safe. Or if I want to be safe, I can sell it all here. Now me, since I know how to trade with this EMA crossover and I see this happening, I wouldn't get faked out because yes, my price broke above that 9 one day. It started trailing it. I would then say, I still profited a good amount from my put. Let's say I scaled some out. I still captured some profits. I'm just letting this one ride out, giving it more time, seeing what's happening. Because I'm still overall bearish, so long as price doesn't break above all my EMAs and give me an uptrend signal. So if I see one day price breaks above that 9, yes, I'll take a hit on that put, but I still captured those profits. So I'll still hold those puts because then I'll say, let the price break above this 21, and then I'll start getting skeptical. I'll start getting, on edge. Fast forward the next day, price breaks above that 21. Me, if I wanted to play it safe in this market, I would sell, um, and just call it quits, go look at another stock. Or if I was ballsy and said fuck it, like I know the market is bearish, I would still hold my puts and say if I would now want price to test that 25. So then you're going to be getting into tricky territories because you're getting close to where you bought in at, but you're still in profit somewhat. But you want price to test that 55 and break above it to give you that uptrend. Because if price breaks above that 55, your 9 EMA will lead and cause an uptrend. So we see here, then that next day leading into after hours, boom, we get a red candle. So it's rejected, trying to break above that 21 to test that 55. So now it breaks below, and I'm like, okay, I'm going to hold my puts because now we're going to have to test that 9. So if we test this 9, I'm going to start thinking, if we break below the 9, I'm going to hold my puts. If we test this 9 and bounce above it to test the 21 and break above it, then I'm going to be like, all right, let's just exit because it's clear they want to bounce the market back up, because Apple obviously follows SPY and SPY is a market. So price broke. Price started testing that 9. I don't know if you can see that. Let me zoom in. Price started testing that 9. And then failed to break. It tested that 9 and then failed to break above that 21. So it got rejected under that 9. So I can still hold my puts. Now, do note that we're fast forwarding days here, and we're just looking at the 4-hour. We're not looking at the 5-minute. We're not looking at no other time frame. We're not looking at the news. We're just looking at the 4 hours and what our EMAs are showing us while still holding our puts. So our 4-hour is still showing us a sell signal. So there should be no reason to sell regardless of these pumps happening. Your normal traders will get faked out by these pumps. But if you have your EMA set up and you know what's happening, you won't get faked out by the pumps, which is why you guys can see me, being able to capture such crazy, amounts of profits on my trades. It's because I don't give a fuck about the news. Like, yes, I care about the news to an extent if I'm using shorter time frames and all that. But if I'm taking a swing, I don't care about the news. It's only what my 4-hour is showing me. So I see here price tested that 9, but it didn't break above it, broke below it. So now my 9 is dragging it down. I can now still hold my puts. Boom, capture another gap down. Hold my puts because price is still showing me a downtrend. There should be no reason to sell. At this point here, if you're tired of holding your puts, you can sell at this point here. Once you go back to that 4-hour and you start to see your EMAs grow, you can sell, take your profit, from where do we get our buy-in if we were to look at this from 292 all the way down to 257. Just swinging. This is not day trading. This is just swinging using your 4-hour, your 10-day or I would say use a 20-day 4-hour, not a 10-day, but a 20-day, just to get more information. But again, that's a crazy amount of profits I captured there. And then if you can see your price trailed up here and all that. If I was ballsy again and said I want price to break above that 21, that 55, I could do that. As we can see here, it didn't happen. It tried to happen, which is a risky move, which is why if you got lucky, not got lucky, but if you were blessed and were able to capture that move and see this curl happen, just take your profits because something like this can happen. And then, you give up a good amount of that profit. So that's a good way to use your EMA crossover when you're swinging. You want to use your 20-day 4-hour. So if we're looking at Apple right now, we can see, let's see what's going on here. So today was a green day overall in the market, pretty much off of that pump. So what happened was, if I'm looking at my 4-hour, price is now broke above my 9 EMA. So what that's telling me is, okay, I might want to swing Apple to the upside only if the next day opens up and everything does its trading shit, does what it does, and closes above this 21. If it can close above that 21, that'll drag this 9 to that 21, causing it to cross. And what happens when you get that 9 crossing that 21? It's normally you're getting an uptrend signal, and you're getting a buy signal forming. You just need that cross above that 55 to get that full on buy signal, and then get the uptrend signal once everything is in full formation. But if we were to take this swing and then we see that 9 cross that 21 the next day, we can get calls using this profit margin here, or this room share right here of support, like this much price. We can use that as our room for loss, so to speak. If you want to, you can also use this support 247 here if you want to be more conservative. But if you want to give yourself more room, you can use a bigger margin. But if we were to get calls here, we can get calls once we see that 9 cross that 21, and then wait for the next trading day to come. If the next trading day is, you don't want to look too closely at that trading day. You just want to look at hourly time span. So you want to wait to see, you want to pretty much see what the market is doing on the overall time span. So if it's overall bullish, it has some dips, but the market is still showing signs that it wants to uptrend. That'll cause that 4 hour to show that, okay, price is uptrending. And obviously your price on your smaller time frames will show that uptrend, regardless if there's any dips, and you still see that higher lows and everything. So if you start seeing higher lows every day, price is eventually going to start moving higher, which will cause your EMAs to cross higher. But pretty much once you get that 9 crossing that 21, what will happen is I would really take that call for a swing. I would take that call only because what we have here is a gap. So I know most people will say, okay, but I see that the 9 crosses above that 21. How would I know how would I know if it's going to cross above that 55 since it's so far away? Your 55 will start trailing downwards, as time moves upwards, or as time goes by and price moves upwards. Your lagging, your bigger indicator will move down. And what will happen here once we get this cross is price is going to gap. Like, I guarantee you, if we get a couple more days of an uptrend, I guarantee a gap up will happen in Apple, just because I see this crawl happening. But what we can also see happen is price can test this 21 and the next day reject under it. If it rejects under it, I'm going to open puts and just capture a nice movement to just test my 9. I don't even have to wait for it to break under my 9. I can just get puts coming off of the fact that we broke under that 21. So now my 21 EMA is resistance. And I'm going to use my 9 EMA as a support to see if it uses that as to bounce or breaks below it. So if I were to get puts there at 251, like if I were to see today an open puts here at 251, but I wouldn't open puts there because it closed above that. But if it closed below this, I would open puts there at 251 and then, be able to capture it all the way down to 246 and not even have to wait for price to break below this. So that'll be another swing, that I think that swing will probably take you a day. But that's just another way to swing with EMA. And it's like, it's really, 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 really simple. You can then start getting more technical with it, using your MACD, waiting to see if your MACD crosses just to get that extra confirmation. But if you can really you can honestly just rely on EMA crossovers. I wouldn't say rely solely on it, but use it as your confirmation. So if you see price, going in an uptrend and you want to take that trade, pull it up on a chart. Look at your EMAs. Look at what your EMAs are showing you. If it's showing you a buy signal is forming to happen, go back to your steps and wait and look at what indicates a buy signal. What indicates a buy signal is your 9 moving above your 21 and above your 55. That's a buy signal. Your sell signal your 9 is below your 21 and below your 55. So my 55 being the red, my 21 is right here, and my 9 is right here. And as we can see, that's a clear downtrend. So yes, this works with swinging as well, and it works with day trading. But if you do want to get more technical, you can then pull up flow algo, which will show you the money flow. So let's say we were to get these puts again. This is what would have happened if I pulled up flow algo to see what would happen, or what's going on. I see this cross here. I want to get puts, but I guarantee you every single institution and company, or not company, but institution and big boy trader, like I call them, they see this as well. I don't know if they see it on the EMA crossover, but I know they see, a downtrend getting ready to happen. Right here at this time, you have put flow coming in, or probably right here, you have put flow coming in, and you have more put flow coming in. So I pull up flow algo and I see put flows coming in. So I'm like, okay, if at this point I see puts coming in and everything, I'm going to wait for my 9 to break below my 21. And then that'll confirm that I'm going to take my puts for a swing. And you can use, those put flows as an extra confirmation to give you, to help you, take that trade. So your first confirmation would be, oh shit, what the hell is this? Hold on. So your first confirmation would be price unable to break above your EMAs because now they're starting to act as resistance. Your second confirmation would be your EMAs starting to, show you signs of a sell signal. So I have my 9 crossing below my 21. It crossed below my 55, but it's crossing below my 21 here. So that's giving me my second confirmation signal of you better get puts. And my third confirmation signal would be, just your level 2. If you start seeing your level 2 showing blood red and people selling, that would be your third confirmation signal. Or if you hear other traders wanting to get puts and everything, or if you see your 9 fully break below that 21 and your 55 there and it's all extended, giving you that full on downtrend, that would be those top 3 confirmations to take a trade. You can, and this works on an uptrend or a downtrend. Let's see if we could use it on VIX. It probably won't work on VIX because with these ETFs, they don't like to use it. Okay, TVIX. Can I use it right here? Perfect. Oh, this would have been a gold mine. This would have been a gold mine. Okay, let me go further back. I have to go more far out. Let's try 30 days out. Yeah, this would have, oh my God. This is why it's important. Like, it is important to keep up on the news, but it's important only to keep up on the news and look at certain stock that the news revolves around. When I say that, I mean, look at SPY, VXX, look at QQQ, look at the market movers pretty much. So if we look here and go all the way back, you remember how I said, if you guys see that EMA, if your EMA start lining up, that lets you know something is about to happen. A breakout is about to happen one way or the other. You just better get ready for it. So if we go far back, I want to see how far back we want to go. Oh, how far back is this? That's in February. Okay. I mean, some of you guys may look at this and be like, okay, but who would, see this in February? People that watch the market like me, I watch SPY and QQQ and all that, so I keep an eye on the TVIX and VXX and everything. So I always see what's happening with this. So if I were to look at this in February, Jesus Christ, my EMA started to line up. And then let me zoom in. If I see here, boom, we have an uptick of our 90 EMA breaking above our 55 and our 21. So we're coming off of a sell signal on the VIX. So that lets you know the market is going down, and TVIX is pretty much the inverse of SPY. So if SPY goes up, this goes down. And if SPY goes down, this goes up. But I think this TVIX follows SPX more, which is why it moves more. But if we look here, our 9 crossed above our 21 and our 55 right there. So it crossed above that 55 and gave us that uptrend signal. So at that point in time, like if I were to see this and see price get here, again, we're on a 4 hour, so we're just taking a swing. I would have gotten calls at this, right here. This is my ideal point of where I would have gotten calls. I don't want to be, I don't want to front and say I would have caught this movement right here, because if we're being real, I would have never caught this movement. I would have honestly caught it right here, just seeing that 9 cross that 21. Jesus Christ. I don't care. Take it down every time it comes up. I don't care. So if I see that happening, then it's like, all right, my price is holding above my 9. I'm going to take calls. And I'm going to take calls because so long as, again, my price is above my 9 EMA, we're in an uptrend. There's no reason to sell. I'm going to hold on to this swing, but I'm just going to buy myself time. That's why I always say whenever I post on trades, buy yourself time. So price is in an uptrend, and we would have gotten that at what? 41.98. Now, mind you, we are seeing these red candles, on certain days, but within these red candles, price is still holding above my 9 EMA. It's not breaking below it. It's still holding above it. So that's price is still in an uptrend. There's no reason to sell. Even with this big candle right here, it came down. Your normal traders will get scared on this and want to sell. But looking at our EMAs, come on, we have a full-on uptrend, full-on buy signal. This is a full-on buy signal. So pretty much I would have, I would have taken this swing right here, and there would have been no reason to sell regardless of me seeing these red candles. Right here would have been okay. I would have maybe gotten to sell already because I seen price break below here, but we were able to reclaim it. Yeah, so we were able to reclaim it. So the fact that we were able to reclaim it would have been, okay, I'm holding my calls. And you would have captured from 41.98 or 42.98 all the way to, oh my God. This is disgusting, honestly. You would have captured it all the way, just coming off of prices in an uptrend. This is not worrying about news. This is just seeing that my EMAs are in an uptrend. 1,000. And I'm being so, I don't know how serious I can come up with, from 41.98 to 1,000, because TRX is very, very volatile. Think of it as Amazon and SPX bunched together. So I don't know if there's contracts that you can trade on this, but if this was just share-wise, come on now, just getting a couple shares at 41.98, just 5 shares at 41.98, and then selling them each for 1,000 a pop. That right there is just insane. And as we can see here, our EMAs are still in an uptrend. So if we're taking today into account, price did come down. Now, if we look at our regular patterns and we know what a bull flag is, this does kind of look like a bull flag to me. But if I don't want to get too technical and cloud my head with all that, and I just want to solely focus on what my EMAs are showing me and if it's in an uptrend, I'm going to say, okay, the next day, so tomorrow, I want price to hold above this 9 EMA. And the next day or after hours or pre-market, I want price to, either trend above that 9 EMA and keep following it. And if it does, come market open, I'll then get a call. So let's say pre-market this is after hours right now. Pre-market is right here. And let's say price is still above this 9. If the market opens, I won't take the trade. I'll wait for this day to complete out. And yes, that's forcing yourself not to trade for a day. But I'll wait for, that day to complete out and see if that price closes above that 9. Then I'll wait for pre-market to happen, or after hours. Then I'll wait for pre-market, and then I'll wait for the next day to happen. Now, price stays above that 9. That's showing me that, okay, we still have room to go up higher. I'll take shares or I'll take calls or whatever, just based off of price holding my 9 EMA being my leading indicator. Because so long as it holds that, price is going to continue to uptrend. But if it breaks it, that's when we start to get a downtrend. But guys, take this into account. Take this into account. TVIX is the market. So because it is going up so crazy like this, that's because SPY is dropping and we are in a bear market. Now, if once we start to, I don't think this is the full reversal point because I think we still have more upside to go since everybody's saying SPY is coming down to 220, 215, 200, even 180. Regardless of all that, once we see TVIX start to, fully make its resistance and break below this line and break below that 21, you guys want to be on alert for SPY, QQQ, and VXX. You want to get into SPY calls, QQQ calls, and VXX puts. And if you want to short these, you can short it as well. But I say that because if our price starts to break below these EMAs, we have our sell signal forming. All we need is for price to start to come and test this 55 and break below that. And if it breaks below that 55, boom, we're coming right back down. And when we come right back down, that pushes the market right back up to all-time highs, which takes us right back out of that bear market. So use this as your indicator to know when we're going to be out of that bear market and back in that bull market. As of right now, we're in a strong uptrend, so we're still in that strong bear market. But I'm going to wrap it up here. I feel like I'm beating a dead horse at this point, but I would want to come back here next session just to take a look at TVIX to see what happened and follow up on it to see what our EMAs are showing us. But that, guys, is how you trade using your 9, 21, and 55 EMA. If you want to day trade it, use your 10-day, 5-minute. Or you can use your 3-minute if you want to get your scalps in. It works perfectly too, but I would say don't wait for your EMAs to show you your crosses. Just let them act as a support and resistance and trade off of that range, off of price bouncing, off of or in between it. That's using your 3-minute to scalp because you can, easily scalp those ranges. If you want to swing, use your 20-day 4-hour. That 20-day 4-hour, and just look at your EMAs. Just wait and see what your EMAs are showing you. But again, trading like this requires you to discipline yourself to let the market do its thing. That's why you hear me sometimes say, just let the market do its thing. I'm going to let the market do its thing. I'm going to give the market time. I'm not going to get in a trade yet. Or you guys probably see me getting into some trades and I may be down on that trade and you guys are wondering why, how come I haven't sold yet? And then I come back, up so much on that trade. And that's my reason for not selling. My EMAs didn't give me the reason to sell. So everybody is getting out because they're panicking. I'm just there like, okay, I guess I don't have a sell signal, so I'm not going to sell until I get my sell signal. And 9 times out of 10, the trade will go my way before it goes the opposite. So for those who probably are wondering who I am Jay the Trader in the Discord. But yeah, we're gonna come next session. I'm gonna speak with Kevin. I do want to come back and look at the VIX and see what happened. See what happens pretty much. See what happens after. So right now, where we're gonna leave off of is the VIX is sitting at our 9. You guys can screenshot this, take a picture of it, and the next day, you guys can monitor this as well. The next day, look at what and see what happens. The next day, look at and see what happens. If price stays above that 9, we're in an uptrend and we're still in that bear market. You start to break below that 9 and test that 21. Start being wary that this bear market might start to reverse. If we break below that 21 and start to test that 55, start to be like, oh shit, I may have missed out on that dip that I've been screaming for. If we break that 55, SPY is back to its all-time highs, pretty much. So yeah, I'm pretty much gonna wrap that up there. If you guys do have any questions, I will be in a Discord. So if you guys are in a Discord, I'm Jay the Trader. So just shoot me a DM and then I'll try and reply to you. I had to clean up all of my DMs to be honest, because it's clouded. But yeah, that's how to swing and pretty much day trade using EMA crossover. It's that simple. You don't have to worry about anything. You don't have to get faked out about these right candles. So long as your price are respecting your EMAs, like that's all you care about. And if we look at um, let me look at the ES mini. Same with the ES mini. Again, if we seen when SPY was going to that all-time high, and we go and look at ES, this is why I watch ES and everything. SPY was at that all-time high, and I think that all-time high on SPY was like 340 something, 330 something, or something like that. But on ES, what happened here? Our EMAs are lining up, right? But instead of that uptick to the upside, we got that sharp uptick to the downside. And within that, what did we get? Our 9 crossing below our 21, crossing below our 55. And then here, I would probably take the trade here. We have a full-on downtrend signal. Our sell signal is right here, you know, our 9 crossing below and our 55 crossing above that 21, putting that 9 below. That's our sell signal right here. And this is our downtrend signal right here. So from going in at, if we were to even trade, if you guys were to do this on SPX at that time and took puts on SPX, and just based off of the EMAs, you would have been riding these puts down, just swinging off of, again, the 20-day 4-hour, riding these puts down, not caring about these green fake Fed pumps. I told you guys, the Fed is pumping, but the selling pressure is too heavy, so don't get faked out, you know? So I know there's days where we got faked out, but if you guys were just looking at your EMAs and the overall, you know, time frame of what's happening, we have a sell signal. Like, it's intact. Our green, orange, and red, it's intact. There's no reason to sell our puts. Our price is riding our 9 EMA, just dragging it down. No reason to sell puts. And so you would have captured a movement from what?
Huh?
What is that?
Yeah.
33.54 all the way down to, if you wanted to wait for that, you know, uptrend, you know, that confirmation of an uptrend, 296 on ES mini. And that profit alone is just that's literally life-changing profit. And you guys can be, this is how I was able to turn, you know, $250 into $20,000 in 2 months, just swinging, you know, and capturing the overall movements, letting my profit ride, because I see my EMAs respecting itself and it's still showing what it's showing. So I'm not getting faked out or anything. I like to keep it that simple. I go a little bit complicated by looking at the money flow and looking at news, but if you just look at your EMAs and everything, look at your MACD, you know, it's that simple. So I want you guys to, you guys don't have to take live trades on this, but if you guys want to run some demand after I wrap this up and all that, and try this out for yourself, or get this study set pulled up on your TOS and just start typing in random tickers. You could, any ticker. Like, because I don't want you guys to think I'm just, you know, selectively picking tickers. Type up any ticker you want to type up and just start looking at your EMAs and start, you know, taking a mental note of what's happening. And, you know, you can cover one side with the screen and test yourself and see, you know, okay, these EMAs are doing this. I expect this to happen afterwards, and then move that side of the paper and see if you're right. If you're right, like this, you guys can learn this in, I think, a week's time if I really come in here and, you know, go over it every time. You guys will be able to learn this in at least a week, 2 weeks, and be able to take trades based off of EMAs. And so you can use this trading penny stocks if you just want to trade shares. You can use this trading big cap stocks. You can use this swing trading. So it's very, 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 it's a very good strategy to use. It's really slept on, in my opinion. But I use this strategy, and I also use chart patterns too, but I'll teach you guys that later. But I just wanted to, you know, give you guys a rundown on how I, you know, take my trades and how I take my swing trades, since I see, you know, a lot of people asking in the chat and all that. But yeah, I'm gonna wrap things up. I'll actually take questions now if anybody has any questions. If not, I'll wrap things up and let you guys go. Because I've been here for a while. No questions for sure. I'm gonna wrap this up, guys. I'll be in a chat if you guys want to chat. So yeah, thank you for having me. Again, I do want to thank Kevin for having me and allowing me to show you guys how I trade and everything. And I hope you guys learn this strategy and implement it. And I do hope it works out for you guys. Don't expect it to learn this overnight. If you do learn overnight, you're a genius. But expect to learn this with like maybe a couple more sessions with me here. Just again, just explaining it, because all I really have to do is explain it, and you guys will really pick it up because I know you guys are smart people. But I'm gonna let you guys go. I don't want to take up much of your time. So take care. Have a good day.